In this video, I want to demonstrate some trades that I've taken on the M15 time frame with gold. I fucking love gold. It's insane. If you're not trading it, you fucking definitely should be. I am an absolute addict, that's for sure. So let's dive in. I'm also using the M15 event break. If you're new to this channel, this is a strategy that I created that I kind of moved away from because it wasn't working across all market conditions, but I didn't have the framework that I have now to trade across all market conditions, right? Because there's so many different things happening. And if you don't have a plan for those things, then, and a strategy that fits on top of that plan, which I went through in my other video, it's so important that you have that. That you identifying what you're doing at every single point in time. If you don't know what you're doing and you don't have a strategy for that, then your plan is basically not foolproof. Simple as that. So let's dive in. So even though I am on the M15 time frame, I still have big picture breaks of structure. I'm not getting into the fucking minutia of all of these minor little breaks to stress my life out, right? We got this big M15 break of structure, and we can make the assumption that after a break of structure, we can assume that there will be a pullback, right? So what these MBs represent is just minor breaks. Now, what we get up here is basically, I'm not going to go into this trade. 290 pips, whatever. This one basically clarifies the strategy way more. This was just a cold trade with a lot of momentum, right? So here we get a liquidity grab. Now, liquidity grab for me is represented by a high being taken out and the low that caused that high being immediately taken out, right? This is not a break of structure. So we have a high being taken out. We have the low that caused that high being taken out. And we have a bearish engulfing structure being left. Now, let's look at the confluences here that allow me to take this trade cold without any confirmation, right? Again, we have a break of structure. And then we have the low that took out that break being taken out, right? But alongside that, we have a bullish engulfing structure that led to that break, that initial break. And when the market came back down, it didn't just break through it. It needs a retest. An event break is basically a bullish or bearish structure that caused a high or a low that gets broken, but it needs to be tested. It can be tested once or multiple times. It doesn't matter, but it needs to be tested. And as we can see here, it got tested. The market then moved up and then proceeded to break down through it. This is all that I needed. So many confluences here. We've got a break and then a break of this high and a break of that low, right? Liquidity grab. We also have a change of structure, right? Because that low that caused that high to break has been broken and the market closed below it. And we have an M15 event break, right? That's all I needed. I didn't need to confirm here to get into this initial trade. So as soon as the market pulled back into this bearish engulfing structure, boom. Doesn't matter that it was 36 points. I just lowered my lot size to mitigate that risk. And the market came in and then proceeded to move back out. Now, this is where it gets really fucking beautiful. Because what I usually do is after that M15 initial supply zone was mitigated, I will then go down to the M2 time frame to basically see the same thing play out again, right? That for further confirmation. So in reality, this trade normally would not be taken, but this trade would be. So let me demonstrate that. Let me just go to bar replay so it's easier to see. So this was the initial touch on the M15 supply zone. And as we can see, what we're looking for before the market touches into that area of supply, we want to find that zone on the M2 that was causing some friction, right? Where the market could not get below. As we can see here, this was the engulfing structure. It got tapped 1, 2, 3 times before it made that high, came back in, then got tapped 1, 2, broke through, but didn't close. Then we got a break. So this bearish engulfing structure now becomes our point of interest, which I actually should just put on there anyway. Make that into a B. And you can see the market pushes into there nicely and then proceeds to move lower. So those two trades literally taken to perfection. We get some internal breaks as we go lower. and boom. Okay. So let's just take a recap here. We've got a larger time frame break of structure. We can make the assumption that there's going to be a pullback, but you need a plan to understand where you're going to play your strategy in that pullback, right? Because you don't know the market's pulling back unless you have a plan to identify what defines a pullback for you and an entry into that pullback, right? Which is very important. So let's just go into the next trade that I was taking. All right, so here we are. So as we can see here, the market, this was the previous trade, pulled back down, came into another area of demand. This is now a larger time frame, right? Sorry, not time frame, but a larger range of contraction, expansion, mitigation, and trend, right? I did not play this area here because I didn't notice this at the time, which was very silly of me. But nonetheless, because we understand what phase we're in the trending phase, so we can begin to identify our structures again, and then still get into the trade, right? So as you can see here, this high broke this low, which led to internal break of structure. And then this high got broken, which caused that low to be broken. This is how I draw breaks of structure, right? A break of structure is identified for me because it broke another break. So let's say, again, this broke the low. So now this becomes my strong high. Before this becomes my internal break of structure, now it gets broken. Now it becomes an internal break of structure. And then this then becomes my strong low, right? So what's important for me to identify a valid break of structure, it needs to be a contraction. Then that contraction needs to expand and cause that break of structure. That's a very, very vital component for me. As you can see, we've got this contraction. We get the expansion that breaks and closes above this previous high. The market then comes back down into my point of interest. And on this particular trade, I think I went down to the M1 time frame. So let's just go down here and see this. As we can see here, we've got this bearish engulfing structure. As the market taps into this area of demand, we get 1, 2, 3 taps that don't break and close above, and then we finally get a break and close. I then use this bullish engulfing structure and take my zone all the way down to the low just to give it room to breathe, and it taps into it perfectly. Let's make sure that's tapped there. And let's zoom back out again. We can see that this kind of like plays out perfectly. We get internal breaks of structure. Get a contraction form inside that, and boom, right, 250 pips. So we have to look at this with gold, right? It clears pips like crazy. This 260 pips, this 240 pips, and this trade 250 pips. This is insane, crazy. That's why I made it so quickly to scale my account back to my my £1,000. And then, we've got one last trade over here as well that I kind of missed. Let's see how this one worked. Okay, so we got a internal break of structure. But again, this kind of like was not really a strong close. And we can see here that basically that was a high. That was at this point in time, this would have been a strong high. And we can see that it tried to break above there, but didn't. So I decided to play a short. I'm not sure if this was the M2. Let's have a look. We can see it here perfectly. Actually, let's take a look at the M1. Yeah, it was the M2. So we can see here that we've got this bullish engulfing structure that was being held up by price. Boom, 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 still can't break through. Now it finally breaks through. That bearish engulfing structure that caused that break, market came back in, tapped in for 13 pip move, and went for 120 pip move. I wasn't sure how this was going to play, so I just decided to take it inside this bullish engulfing structure, and you can see that played out pretty smooth. Really easy trade, right? Quick trade, super quick. And that is the strategy in a nutshell. What's important here is for you to define, which I put in my last video, is that at each point when something breaks, you need to have a plan and a strategy that fits on top of that plan for that. When it comes into areas of location, you need to have a plan and a strategy that fits on top of that. Whether the market's going up, down or sideways, you should have a plan and a strategy for that, right? And that's what I didn't have before, right? I just had a strategy that I was placing trades on at every point that I saw a potential trade to play when I was looking at certain patterns. Now I'm waiting for certain market conditions to appear, and when those market conditions do appear, I then have a plan for that market condition of which my strategy fits on top of. I explained this in my last video. It's the most vital component to your trading. Make sure you have a plan and a strategy that fits that plan at each point in time and for every market condition. I'll see you in the next video.